Manual payroll at its most basic consists of applying calculations to get from a gross pay figure to the corresponding net pay for an individual. There are 3 tax calculations that we will learn, each of which will be deducted from the gross pay to give the net pay. The first tax is called PAYE, which stands for pay as you earn. Currently there are 2 rates of PAYE, 20% and 40%. The second tax is called PRSI, which stands for pay-related social insurance, and this is the main source of funding for social welfare payments. The third tax is the USC, which stands for Universal Social Charge. The Universal Social Charge (USC) is a tax on income that replaced both the income levy and the health levy. So, we will focus on calculating PAYE first. Only when we have practiced the PAYE calculations will we proceed to the other 2. In this section we will introduce the standard rate cutoff point, otherwise known as the SYOB. Currently there are 2 rates of PAYE, 20% and 40%. Each person is allocated a cutoff point by the revenue commissioners, and this dictates how much of your pay is at 20% and how much is at 40%. You pay 20% of your gross up to the cutoff point, and 40% on the amount of your gross above the cutoff point. It is important to note that when your gross goes over the cutoff point, it does not mean that all your pay is then taxed at 40%. Only the amount above the cutoff point is hit for 40%. At the start of each year, the revenue commissioners allocate each person their individual cutoff points depending on their circumstances. For instance, there is a set cutoff point for single people, another for married, etc. Working through an example of this calculation will help to explain the concept further. In this example, a person has a weekly gross pay of $1,000. They have been allocated an SYOB of $800. Which means that $800 of the gross will be taxed at 20%, and the remainder, $200, will be taxed at 40%. The $200 was found by subtracting the cutoff point $800 from the gross of $1,000. 20% of $800 is $160. 40% of $200 is $80. Add the 2 together and the total tax due is $240. In example 2, the gross is lower than the cutoff point, so it is the $700 that is taxed at 20%, not the SYOB, and there is nothing at 40%. So, while we have calculated the 2 rates of PAYE, we are not finished yet. Each person is given a tax credit. This credit has the effect of reducing the amount of PAYE that we must pay. The amount of the tax credit varies based on the circumstances of the taxpayer. To demonstrate the tax credit, we will first calculate the PAYE due on a gross of $1,000 with an SYOB of $800. This comes to $240. We then subtract the tax credit of $80, and this leaves us with a final payout of $160. Example 4 shows a similar calculation with a higher gross of $1,200. Example 5 shows the calculations done when the gross is the same as the SYOB. Example 6 shows that in some cases, there may be no PAYE due at all. you will notice that the tax credit is larger than the tax due. This does not mean that you get a refund of 20, the actual tax due remains at 0. The 20 left over is carried forward each week and is available to use if the gross increases in future weeks in the current year. We will look at how this is calculated later on in this session. Finally, example 7 is just another similar calculation with a high gross pay figure. The next payroll calculation is the PRSI. There are two types, employee PRSI and employer PRSI. We will go through both types in this session. The typical PRSI rate is 4% of the gross. However, an employee with a gross of $352 or less will not be charged PRSI. There is also a small reducing credit for any gross pay between $352 and $424. There are a number of different PRSI classes, but the most used one is Class A. A schedule of the other classes can be found at the end of your workbook. These 4 examples of PRSI calculations show how the 4% is applied. Once the gross goes over the 352, then all the pay is taxed, not just the amount above the 352. An employer pays PRSI on the gross. This figure is a cost to the employer in addition to the gross pay. A gross pay of up to and including $395 is taxed at 8.8%. Everything over $395 is taxed at 11.05%. And again, this is calculated on the entire gross, not just the amount above the $395 threshold. These 4 examples demonstrate how the employer's PRSI is calculated. Within Class A, there are a number of subclasses, and these are based on the amount of the gross. Paying PRSI over time means that the employee is entitled to the benefits shown. Self-employed people are on Class S, and there are a lot fewer benefits available to them. The last payroll calculation in this section is the Universal Social Charge, otherwise known as the USC. There are a number of different brackets and corresponding rates as shown here. For USC calculations, when the gross goes above a bracket, it does not mean that all the gross is taxed at the corresponding rate. Only the amount of the gross within the brackets are taxed at that rate. This will become clearer when we do some examples. If the gross is $13,000 or less, then no USC is charged.